Up only.
10, 9, ignition sequence start. 6, 5, 4, 3, 2, 1, 0. All engine running. Liftoff. We have a liftoff.
Up only.
Hello and welcome to Up Only TV. My name is Brian, aka Ledger. I am here with special guests today. You all know Cobie. Hey, Cobie.
Hello, mate. How you doing?
I'm doing great. And we've got a special guest today, Su Zhu. Su, how are you?
Good, man. Awesome to be here.
It is a pleasure to have you. Jordan, Cobie, take it away.
Yeah, you need to turn your mic up a little bit, by the way, according to chat.
All right, it is up.
Just yours. All right, dude. Well, thank you for joining us. Up Only TV. It's the only crypto talk show where we do absolutely zero preparation to talk to the most interesting people in crypto. So I apologize to our viewers and to you for making the huge mistake of coming on and wasting your time with us today. But for anyone that is maybe a new listener, maybe new to crypto, can you share a little bit about your background, how you got into crypto, how did 3AC begin?
Yeah, sure. So I guess my background, traditional finance, started Three Arrows mainly as an emerging market FX fund back in 2012. And it was around the same time that I kind of started looking at crypto, but just as like an arbitrage trade to do where you can kind of buy it in Bitstamp and sell it in China. That kind of stuff kind of interested me because you started to see it being used for cross-border. But really that crypto is quite small than I thought. And so didn't pay that much attention to it, mainly focused on trading FX. And then, later on in late 2013, kind of got really active when the derivative exchanges started coming up. So used to do a lot of arbitrage on exchanges which are now dead, and kind of got burned a bunch there personally, and then kind of said, okay, just like hold some crypto and we'll let it be and ignore it, and then mainly focus on FX for a few years in Singapore where we grew out the firm pretty big, and then past couple years kind of just focusing all on crypto and both like long-term investing as well as shorter-term tactical, but kind of deeply bullish in the whole space, especially on both Bitcoin store value thesis as well as smart contract, programmable money. So kind of really excited to see how the market's grown past few years and to see how the community's developed, and really happy to, I've been following you, I think probably quite early on. So it's an honor to be here speaking to you.
I apologize for deploying my mind garbage into your brain. It's probably made you a little bit dumber. So you basically believe we're currently in the super cycle, right? The cycle to end all cycles, the one that binds them, the Amazon cycle, up only for 100 years, Bitcoin as the unit account for all things. And what if it isn't? Like if we hit, 100K in the next few months and then it does another minus 80% drawdown, what's the future of Bitcoin in that scenario?
I think it would still survive and do reasonably well, but it would be much more of a niche at that point where it's not really, it's kind of not really played out its ultimate vision. And I do think that if that were to happen, it may also mean that sort of Mises regression is not done for money, and you could probably see Ethereum do really well in that kind of environment where people will say, okay, like money has to be moving around more. It has to be more malleable. So I think that that's most likely what would happen. I don't think it would be the death of crypto, but I do think that if Bitcoin specifically were to do that, it would just mean that it's too early still to figure out what the base money of the market is and the base money of the world is. But I'm quite confident that we will have a consensus base money, whether that's Bitcoin or something else. I happen to think it's very likely to be Bitcoin given the way it's developing now, but I definitely open-minded to that evolving in a separate way.
And if it is Bitcoin, if, this is the super cycle and we're on the way to the Citadel and, Singapore's renamed Three Arrows 3 hours, literally 3 hours capital. It's just a different kind of capital. How do you see non-Bitcoin chains in that ecosystem? Like, where does ETH fit in? Where does Solana fit in? Is it all going to zero? Does it coexist?
I think it coexists really well, actually. I think there will always be kind of this power law effect for store value. So people want kind of an 80-20 mentality where they say, okay, Bitcoin is the dominant store value, but then you need a secondary one where people hold it as a hedge against the first one, and also it can kind of mark up and down with it. So you kind of see that already with the way that Bitcoin and Ether trade. They generally trade more like monies. They're held more like a money in the part of a portfolio. And then I think you'll see that with smart contract chains, only I think it'll be more distributed as well. So I guess I'm kind of like a long-term Ether bull, but for different reasons than most people have. But like, I do think that with Polkadot and Cosmos and Solana and a lot of the newer smart contract approaches, like they are definitely better in a lot of ways. But I think that ETH has a lot of network effect as the settlement layer, has a lot of network effect for this asset layer. I mean, ERC20 is a pretty strong network effect as well. And plus, I think just like the distribution, the coin distribution is very solid. You can never really get the genie that ETH has again, I think, in an altcoin. Very hard to do. So I think I kind of see it interop nicely. And I think too, you're kind of seeing that with like the way that people are coming into the market this bull cycle, right? Like you see people like Mark Cuban who are like, Bitcoin's a scam. But now that there's Nifties and there's DeFi and there's a lot of activity, organic activity happening on Ethereum, he's now open to the idea that you need a digital as store value, and then you have this kind of whole ecosystem that's developing around it. So I think just from the narrative and just from the fact that you can potentially live a whole life entirely in crypto, that kind of is really valuable actually, and gives value to all the parts.
Sue, I have a question about the super cycle version, where Bitcoin becomes all things. I pulled up the stock to flow model on the stream. Do you think it would essentially follow stock to flow, or is there a super cycle success version that, can fall out of stock to flow or something?
I definitely think, if Bitcoin price goes over $1 million, goes over 500K, it's not going to be driven as much by retail anymore. It's going to be driven a lot more by larger players. And so I think you'll generally see much more muted moves on the way down as well as on the way up. I think you'll just kind of see it evolve into a very mature asset at that point. But I think stocks to flow, I don't buy into the entire model per se, but I do think there's something to be said there where, you can have a very high market cap where not a lot of it is moving around on chain. Not a lot of it is changing hands all the time, right? And so you see that kind of now with the way that central banks hold gold. They're not trading around all the time. They all hold lots of it, and they just kind of keep it in vaults. So if those are the kind of players that are generally ending up holding Bitcoin, if it's a lot of high net worth holding as well, there's going to be a lot less panic, right? There's going to be a lot less like just dumping it out. And you're seeing that already in this cycle where, the dips are a lot less shallow than people expect. Even when you have 10 billion of liquidations, it still gets bought up by people because, these are the same type of people that have been buying the dip in equities markets and asset markets for 20 years, and they've been getting incredibly wealthy from it. So now they're like, okay, I can do the same thing now in Bitcoin. I know that everyone else wants this asset. So it's a Schelling point for us to all buy and collect this asset and this scarcity. So I think that's one of the reasons why I caution people to not look at funding too closely to say, okay, this is going to have to nuke 30%. We're going to have like a March 2020 drawdown because, the big money is definitely here. They're definitely watching it's like that meme, like billionaires watching the candles close, and, they're definitely watching the candles close. They're all over it. So
it seems like we're, even when we do have higher volatility now, it's more likely to be off of standard market hours in order to kind of kickstart that. Do you think that'll start to get dissolved out of the price action as well?
Standard market hours in terms of like weekend, weekday.
Yeah, weekend and holiday stuff tends to be when we have these crazy candles. Do you think that that'll start to be kind of dissolved out of the market as different participants get more accustomed to working on the 24/7 schedule?
No, I actually don't think most people will ever work 24/7. I think weekends are a pretty important part of societal structure. Mm-hmm. So I think you'll tend to see lower volumes on weekends, but you're definitely right that the weekend flows have kind of revealed a lot about where the market will go next. Like in general, I think whenever the weekend's been very weak, you have like nice Monday, Tuesday moves higher. And then whenever the weekends are like really strong, you then have like nukes afterward as a general rule. So it kind of seemed like the flow on the weekend is generally wrong, basically.
Yeah.
Relative to the rest of the week. So, I mean, probably over time, people will say, okay, why don't we just run a TWAP on the weekend instead? Or why don't we just run a sell iceberg on the weekend when it's too high? So I think that kind of stuff will definitely meet it out over time, but you'll still have, a fundamental liquidity gap, I guess.
Right.
I want to zoom back to the super cycle and imagine it is the super cycle. I want to know your thoughts on what the end game is from a macroeconomic environment like that. Stagnant wages, asset prices inflated, low interest rates, maybe negative interest rates, high inflation, fears of hyperinflation, if not realized hyperinflation, increasing wealth inequality, a rise of retail day traders, people's parents are like becoming at-home options traders, perhaps because they realize there's no other way to reach their financial goals apart from like a lottery ticket. Is it just like straight road to citadel and underclass, and is it worth avoiding? And yeah, just generally, what are your thoughts?
I don't think it's as dystopian as people say. I think crypto arguably is more of an optimistic road out where, I think the most powerful thing about crypto is that it's more peer-to-peer, right? It's fundamentally, you can create digital economies that are not tied to how shitty your country is or how shitty, whatever is happening around you is. So I think that is actually largely going to be what happens. Now, I do think that it doesn't mean that there's going to be less inequality. I think that those are two different things. I think that there's a lot of technological reasons why we're heading toward higher inequality, and I do think that there are ways that that'll get counterbalanced by behaviors. But I think that there's almost a separate mega trend to crypto. I feel one of the scary parts about libertarianism is that you see a place like Hong Kong, you eventually 10 people own 50% of the assets of the city, and so crypto I think is better than that for sure. I mean, the genies of Bitcoin and Ether are far better than people realize. Actually, I think people always talk about the old whales or the OGs. They all have far less coins than people think, and there's a lot of ways to lose your bitcoins. There's a lot of ways to make mistakes. So we all know that. So it's kind of something where I think fundamentally it is more fair, and I think that more importantly it allows communities of people to decide what businesses that should be started, what are ways that people should be interacting and organized. And that's why I kind of see it tied to the Web3 thesis as well, that's starting to take shape, where you have the walled gardens of big tech of the 2010s. And so in a super cycle of 2020s, I think you're going to get a lot more applications built that are very lightweight, that are very crisp, where users own, users are generally the owners. I think you're seeing that already with DeFi, right? Where it's captured the imagination of some very, influential people in finance, very deep thinkers as well, where they say, this is actually like 100-year trend, where, you had in the 17th, 18th century, you would have had co-ops of farmers that they would pool capital, and then they would, insure each other, and they would do this stuff. And then you had, waves of consolidation driven by regulation and driven by just kind of the way the markets evolved. And now you're going, with the advent of the internet, kind of people predicted that at first, but then it went the wrong way, or it went a separate way for quite some time because of the whole free to capture, the free to play model, the free to, access model. And so now you're going with DeFi and with sort of radical tokenization and, this kind of stuff. I see it as very much going back to the initial spirit of the internet, of open source, and sort of, so that I think for like open source, for money, for applications, and for the basic unit of social interaction. Like I think that's quite powerful. And I think like if it were to be around for hundreds of years, you'll see more and more countries over time. You'll probably see over 1,000 countries. You'll see a lot of breakdowns of countries where they say, you know what, like we can govern, in a far smaller unit and far more efficiently than we could before. So I think there's already like macro trend toward that, I think. But I think that assuming that crypto can kind of keep that momentum going, I think that that's ultimately where we're ending up, where there's a lot more individual sovereignty, kind of a rollback of the big state, if you will. So,
yeah, that makes sense. You mentioned that there's like this recognition of DeFi as this 100-year trend, and institutions and like big financial players are sort of beginning to recognize that. Our audience is mostly crypto Twitter,
degenerates.
and a bunch of them from 2014, 2016, probably with PTSD from altcoins that all went to zero, and maybe missing now that there's a wave of altcoins that are sort of productive assets instead. Like 3AC, you guys have a select portfolio of DeFi stuff on your website. I'd love to know how you analyze what you're backing, and like what makes you go in on something and pass on something else.
Sure. I mean, just on the first point you mentioned too, I think it's really important to point out that like crypto is such a good analogy to like the 19th century railroads in Britain, because you had in the 1840s this huge bubble in railroads where, you know, they laid track that people thought would never be used, but then 20 years later it got all used in the second railroad bubble, and then that was not actually a bubble, and then when they just used trains. So I think that's a great analogy from the 19th century. I mean, obviously with .com and tech you have that analogy as well, where, you know, when Amazon breaks all-time high the second time, there's no like echo bubble, right? Because if it were to have done so, it had to have done so because people are realizing the fundamental merit of it under conditions of zero hype or negative hype, right? And so it's, you know, I see kind of Ethereum, Bitcoin, you know, DeFi emerging out of that perspective. So that's why I say to people, you know, like sample sizes are not that big, right? Like it's not like you're going to be able to play these bear bull cycles like every 3 years the rest of your life. Like either it makes it or it doesn't. And right now it's looking like it's going to make it, right? So I guess coming back to the DeFi question, I think, you know, for us, we really value when the team is very committed to the principles of decentralized finance, where they try to be as interoperable as possible, and where they also are trying to kind of have a grander vision where it'll generally stay like they have a path to decentralization. They also are on top of the major trends of this year and next year, which is, you know, Ethereum layer 2, how that's going to play out. They have a scaling roadmap. These are kind of all quite tricky, but I think broadly as team and broadly is the way that they view it and just like their passion for the project. So
that makes sense. And then some maybe free alpha for those in the chat. How quickly do you update the portfolio website after making an investment? People are realizing Woo's on there. Is this like, yeah, we bought it, we put it up straight away, or is there like a 6-month delay? Free alpha for the chat.
We honestly don't time it like on the website. Like we update it once every couple months. So I think Woo we did a few months ago. We did a seed round on that, and yeah, we just hadn't had time to update the website since. I mean, or like we forget. I mean, it depends. But also it depends on the size of our investment. Like if we do more of a small, like not a lead, then we won't put it on always. But if we, you know, lead it, then we generally will put it on. So
yeah, this is Crypto Messiah's entire trading strategy was to just continually refresh this select investments page and see what you can get into.
I mean, it's not a bad idea, at least for people that are trying to figure out like, how do I analyze fundamentals of the space? Like if you know you're not, you know, really up to speed like some of the better funds are, do you think like that's not a bad way to go? Kind of filter what you're willing to invest in based on who else is invested?
I think this cycle definitely yes, because like one of the biggest differences that I see between this cycle and last one is that in the last one you had a lot of like seed round, like round 1, round 2, round 3, round 4 shenanigans, where like people like, you know, I saw some projects with like 60 funds in the round before, like, you know, and they all have cliffs and they all have this kind of stuff. I mean, for us, like we never sell any of our private sales. I mean, we write it to 0 or $1 billion for the most part. So I mean, my view is that if I'm bearish, I'm just going to short Ether and Bitcoin. So it's okay. I can make it back. I can make it back through the majors, so to speak. That I don't need to go around dumping privates. So I think, I mean, that's also why a lot of teams like us, because we don't have to dump privates to feed our family or something. But yeah, I mean, I think that the signaling is a lot better this time around. I mean, there are a lot of great DeFi funds like Framework, Parified. There's a lot of these that are like deeply committed to the thesis behind it and deeply committed to, I guess, like just the whole idea of how these will evolve together as well. And there's less competitiveness, right? Because in 2017, it's all narratives and stuff. So it's like each narrative is competing for like mind share with another narrative. Whereas with DeFi and composability, like these things work well together. And the more you build, it's like moving to a city together. Like the more people you bring and contribute economic activity makes everyone else wealthier. So you're seeing that very non-zero sum thinking come into the market this year. Even with layer ones, I think you're seeing this now where people are saying, okay, you know, like this can do well as a side chain, or this can do well as an effective layer 2 for Ethereum. And I mean, Ethereum obviously has huge problems with scaling right now. So I think that you know, that ultimately is fueling a lot of you know, speculation in the non-Ether coins, but it also accrues value back to Ether in a lot of ways as well, where it kind of enshrines the asset layer, and it also kind of, you know, like everyone's now building bridges to it. So that's also kind of strong for it. So
I want to give a shout out real quick. You do Uncommon Core, which is a podcast where y'all talk about the fundamentals of a lot of these sometimes, and that's been really good. One of the things I learned in that show, though, was where y'all were talking about the tokenomics difference between some of these projects, and that I feel has really played out in this early 2021 cycle where everything moved, but some of the stuff y'all talked about then, like you really saw how much it affected like the uptake of the price. A good example without like pumping bags is, you know, Compound versus Aave, like pretty comparative products. You went on about the fundamental difference of the tokenomics and the community and stuff. Can you dig into that? Like how people could even analyze one DeFi project versus another, and in terms of how it, you know, accrues value back to the token?
Yeah, like I think in general, the projects that are a little bit closer to grassroots communities and their token ownership and governance is closer to, especially, you know, if you can have very powerful pseudonymous players in that community, that's always a really strong sign, because it means that they're willing to, like people can contribute ideas not based on the strength of their name, but based on what they say, right? And so, you know, in Sushi, you have a lot of pseudonymous characters, and, you know, in Aave you have as well. And I think that's really, I mean, that's a huge part of it, because ultimately what we're doing, right, is we're creating these kind of distributed networks of actors and participants who are coming together to create financial applications. And, you know, if I do think that there's a roadmap for sort of the Compound, Uniswap, Maker types to ultimately decentralize, but I think that it's generally a challenge, because the considerations of token holders are quite different. It's like the ideal way that DeFi were to be done, you know, would be like the Satoshi 2.0 style, right? Where they kind of release it and then the community sees it and recognizes it. It's the greatness of the idea, and then they come together and they do it. So, I mean, I generally think that if you bet on these primitives, you'll have an easier time of it, because they'll be much more in tune with what needs to be done. And also each token that is released will have been earned in a separate way, basically.
We're seeing an increase of DAO to DAO activity, and also seeing like institutions, Coinbase, Paradigm, yourselves, fundraising directly from functional DAOs. Again, a bunch of people listening will probably be 2016, saw the, they'll hear DAO and think of the failed 2016, 2017 DAO, and wonder, how is it different this time? What sort of changed?
Well, I think the DAO was a good idea. It was just way before its time. The code wasn't, like the code quality wasn't there yet. I think so many things in that period, they're like exactly like Amara's law, right? Where things are very overhyped in the near term and then very underestimated in the long term. And you're seeing that now where, a couple years ago, if you mentioned DEXs to people, they'd be like, you're insane. Like no one's gonna trade on DEXs. They all trade on, we all trade on Coinbase. But man, even when you think about
I tried pushing that narrative all 2017, like when I first learned about 0x, for instance, and it never clicked. Like the relayers were just garbage back then. It took so long to come around. Yeah,
like in general with hype cycles, like the hype is usually correct. It's just early. I think that's almost been always true in technology. It's always been true in markets. Very rarely do people get very hyped about something and then it's not actually that good of an idea. Maybe the segue. Things like that. But
no, the segue is coming back. It's a temporary dip, mate. It's coming back.
Oh, it's true. It's true. Just gotta hold on. Yeah. But so I think you like the whole ecosystem is there now, right? Where now if you have a DAO, you can actually do things. You can trade on a DEX, you can borrow, you can do all this other stuff. And like that's why I think DeFi is really exciting people, because it reminds them of the narrowband internet days. Where, first you had very expensive elite access to it. You have groups of power users that are already it's showing some product market fit, but it's very expensive. And people aren't sure how to scale, right? Like you can see the analogies perfectly where, back then people were like, how are you going to do broadband? Like, are we going to trade broadband? People thought that if you wanted to use the internet a lot at like 7 p.m., you'd go into a market and you'd buy like 7 p.m. internet futures, and then you like lock in your like internet. But it's like the same thing we see now with Ethereum, right? You see like Chai, you see these kind of things where like the scarcity. But I think with layer 2 scaling, with a lot of moving the load off, but maintaining as much decentralization as possible, like if you can have, once you have the scaling, people are now imagining, okay, well then you just have everything. And so I think I think the beauty of the regulatory narrative for DeFi too is that it sounds very compelling to even governments, because they'll say, okay, maybe I can't, monitor the way that I can monitor a bank, but, who am I to stand against peer-to-peer finance, and who am I to? So I think in the free part of the world, you'll generally see regulators be more dovish toward DeFi than I think some people expect. Especially in places like Europe, where you see a lot of animosity toward banks in general from the great financial crisis. Governments will be willing to let developers push out these kind of projects and to see them through, in my opinion. And I think that is underrated by the market as well.
You think it's preferable because the regulators, the government, then know they don't have to rely on someone sticking to a risk framework or someone sticking to making good decisions in a closed room when it comes to user outcomes versus profits.
Yeah, I think that's a great way to put it. I think also it arguably gives them a way to interact with people directly. And so I think one of the reasons why China is really into CBDC is because they think that they can eventually circumvent the whole fintech layer, where if they want to give an airdrop to citizens, they can just give it directly. So I think you'll almost see you'll probably see government chains, and you'll see consensus chains that are non-government, and then it'll be very tough to be a financial intermediary. I mean, to be honest, if you zoom out, we've been in a 100-year bull run for financial intermediaries since JP Morgan, right? Like if you told people in the 19th century, there are these people that are going to push around money and you have to store your money with them and then all this, they'd be like, no, I just hold my gold in my pocket or something, right? Or I just hide in the ground, or I just own my farmland. So, it's from a 100-year point of view, people now keeping their net worths in the crypto sphere, people, doing a lot of their commerce there, historians will find it incredibly obvious, in my opinion. They'll say, what could have possibly happened besides this? And so that kind of is really why I think it's arguably much more bullish now than people realize.
So how do you think the regulatory landscape plays out over the next few years? Because, people are worried with Yellen back at HQ and Biden admin and the previous Treasury dude, or whatever he was called, saying it's all terrorist money. It's all money laundering. And it feels like there's a couple of like regulatory narratives. One's around, just outright fraud. One's around securities and unregistered securities and fundraising. And then there's the big one around KYC, like dark money. And that one feels like the one where regulators just sort of have this free political pass to be like, well, the terrorists and the pedophiles, like we've got to stop them, and just like slap that on anything. So how do you see the sort of general regulatory landscape playing out?
I think like that was one of my biggest concerns during the previous cycle. And I think probably why I think I discovered crypto when I already had a decent amount of money. And I think like, compared to that point, I'm still way down in BTC than if I had just gone like a proper investment at that time. And I think it's true for a lot of people as well, because they thought, the regulators would just like crack down more, and there would be, and then, seeing that happen in China with, BTC China, they closed, a lot of these exchanges closed. I just thought, okay, well, it's going to be a lot tougher to really get traction. But like, if you see what's happening now, like, I think crypto is also the language of populism, and populism in an optimistic way, not sort of the nihilist populism where you just buy some weird stock and you then like hope that it like goes up or down. I'm not even sure if they wanted to go up or down. I'm not sure. I haven't been following the memes. But like, at least for crypto, you're like building something real. So, and it's accretive, right? Like if we all buy GameStop, what have we done? You haven't done anything. So I think, I think that as an outlet for populist energy, like as something that is like free for just like liberated people to do, I think that's underestimated. Like even in China, where there's no fiat exchange on ramps, like there's still a lot of activity. There's still a lot of projects and everything, because people like even the government, they realize like you can't stop a person giving something to another person in the physical world and then something else happening in the internet. You just can't stop that, because that's literally, two actions. And so that one-to-one correspondence of action being like unbannable, it kind of made people, I think it made governments realize that, okay, well then, is this a novel way that we've created to do trust minimized finance, do trust minimized commerce? And so once they realize that, and they realize that the huge wind of optimistic populism is behind it, it's going to become very dangerous actually as a politician to be against crypto, I think, for some period of time. Like you kind of seen that already now, right? In like the mayor of Miami, and then you see Andrew Yang and Chamath running for governor. Like the political clout of this kind of, peer-to-peer movement is actually far stronger than people would have imagined, like, back in 2014, 2013, where it was like much more hobbyist community.
Do you think the way that they'll attack trying to have that control is through some kind of regulatory strangle instead, where they realize it's not going to work to ban it, but they can make it to where they know everything that's going on from the way they manage regulations?
I think it's a tough question, but I think what they've already seen happen is a lot of offshoring, right? A lot of regulatory arbitrage, where you have like BitMEX offshore, FTX, Deribit, and so on. And so they've seen that, well, if they just don't have a good regulatory framework for it, people are going to do it anyway. And there's always places that they can do it from. And so I think them recognizing that, it's kind of now created the more people can have substitution goods, the less likely the government is to be ultra draconian, because it just pushes the activity off. And I think that's the narrative that a lot of the U.S. crypto VCs have been pushing, which is to say, if you regulate it too hard, it's going to happen anyway, but you're just not going to be able to see at all what's happening, and your country may also be at a big disadvantage, right? So I think that plays into it for sure, right? Where I actually don't think that governments are as statist as people think they want to be. Like, I think that game theory wise, long term, there's definitely like a case to be made that the US, like they said, like this is really bad for the dollar or whatever. But even in the US itself, you see a bifurcation, right? Like you see a lot of Bitcoin adoption now among like the people who you could say were like the ex-Trump administration, right? You see like Scaramucci, like Bannon, this kind of thing. And, you know, like if they hyper Bitcoinize Bitcoin, like, you know, that's good for some Americans, it's bad for others, right? And so you almost may see like that may be what creates the US Civil War, right? Where then the US is like, okay, well, we're gonna have these multiple regions or something, or you know, there's gonna be, so there's so many different players, like for like there's no singular government. There's no singular government that's like, oh, you guys are, you know, this is what we want to do. There's no agenda like that. It is people themselves. So I think that you know, some people don't mind seeing the dollar fall a bit and then having you know, Bitcoin as a store of value. So, you know, that's kind of been, I think Daniel Kravis, he wrote about this a long time ago, where he said like, eventually as crypto goes up, you know, people, politically powerful crypto people will be part of government as well. And then this infiltration just keeps going. And then suddenly you realize like, it just becomes the establishment. And, you know, that I think you're seeing happening already with Elon Musk, right? Where, you know, people really wake up when they see this kind of stuff, like Elon Musk, like Ray Dalio. These are huge conservative names in general in finance. So, you know, for them to support Bitcoin now, people are saying, okay, well, this has the establishment support.
I had to down the rest of my drink when you told me I was pumping the U.S. Civil War, contributing in a way to the U.S. Civil War. I finished this drink.
You got awfully close to the Hunger Games version, like Sector 13 comparison there.
You mentioned in the middle of that Deribit, so I want to move on to Deribit and options a little bit, because options were pretty new to me. I'm basically like early retail that never. I'm not big brained enough to progress from retail. So I learned about options earlier last year from my quant cryptopathic. And last cycle, no one really spoke about options. I don't even know if there were options markets running. So I'd love to understand the impact you think this introduction of options and the huge open interest in options has on the market cycle and what it looks like in the future. And I know Deribit is one of your portfolio companies as well.
Yeah. I think it's, you know, as the space matures, it has a big impact because options are huge in almost every big underlying. So whether that's gold or stocks or FX, foreign exchange, it's always huge because there's always participants who are like, if the price goes up much more, I don't mind selling there anyway, so I'll sell a call, right? Or conversely, if the price goes down and then they say, I wouldn't mind buying there, then I'll sell a put. So, you know, these kind of short volatility strategies where they harvest it, it naturally does reduce the volatility of the asset. And that's why, like, I now think that as Bitcoin goes up, as crypto goes up, volatility will go lower because this kind of vol harvesting will only get more attractive. You can almost think of it as like buying the dip, but being paid to do so, or like selling the pump, but being paid to do so. Where, like, obviously if they're wrong, then they don't have any coins anymore. And then that sucks for them. But if the space is mature enough, you know, if the space is mature enough, then they say, okay, well, even if I don't have any coins, I still have income. I can get more coins or this and that. So, you know, you've seen a lot of covered call activity where people think that you can get a yield on Bitcoin that way. But also you're seeing a lot of like macro funds buying these calls, right? Like, because they just think, you know, if Bitcoin, you know, can randomly pump 5x in a few weeks, then, you know, the calls are all underpriced. So there's this great two-way market where there's holders that are like, if it hits this number, then I'm out anyway. So I'll harvest the vol. And then there's guys that are saying like, we're just going to go to 5 million or something per coin. And, you know, like Saylor, I think he just said 100 trillion is his target, which would be around 5 mil per coin. And so, like, you know, if that's your target, then you can buy these 400K calls. And people are buying them this year, which is pretty insane to see. I mean, ETH, you're seeing people buy 25K calls, which, like, obviously if you're right, you just make an absolutely absurd amount of multiple. And so like I went back and I back tested like in 2017, had there been calls, if you had bought like a 3K call when spot was 1K or like a 5K call, like you just be up insane amounts of money, right? You make like $1 billion or something off like relatively small investments. So I think, I mean, options are a great product because they're like a mind hack. There's so many ways to trade them. You can trade them as a speculator. You can say the market almost certainly will nuke, so I buy puts, and then I'm up like 20x if I'm right, and if I'm wrong, I lose my premium. You know, as like harvesting volatility. If you can define actions you would do anyway, then you can like sell these options, and then you can feel that that's a good risk management for you. So I only expect it to grow further.
Chat saying 25k ETH is FUD.
Maybe. In December, you had Josh from Orthogonal Trading to talk about options, and that was fascinating to me because, and I wonder if there's just a discrepancy here still, because when I look at options in crypto, which unfortunately I just can't trade, which blows from the regulatory standpoint, but I look at options in legacy versus crypto. The IVs are all insane, but y'all pretty much talked about how you only had interest in long vol strategies for the most part. Is it just a discrepancy where people who are selling premium are underestimating the volatility in crypto? Like what is that discrepancy that's happening there?
I think at that time the vols were exceptionally low. During the run up from let's say 11K to 19K, there was a lot of call overriding happening where they thought, well, Bitcoin's not going to move that fast. Like it's not going to break out that hard. So we just sell calls and then we're good. And that completely stopped after we broke 20K because people were like, fuck, like I'm going to not have any Bitcoin left really fast. So I think that was almost like a unique, like 2-3 sigma opportunity at that time. I think now it's a little more fair. So if you want to do like call strategies, you might have to do call spreads where you buy one call and sell a higher one so that you give up some of the big upside on the top side, but your premium cost is reduced a bit. I think stuff like that is probably more value now because there's fewer natural call sellers. But I mean, interestingly enough, right? Like you had that huge whale who bought
the 36K,
the 36K calls, and that actually squeezed a lot of market makers because a lot of them didn't expect it to get up there. So when it did, they buy a ton of perps, a ton of futures, and it pushes the contango up, pushes the funding up because they didn't think that there would be that much deltas to have to hedge there, right? So, and
that was essentially a similar concept to the way the GME squeeze occurred, right? Like the gamma squeeze that is in effect there.
Similar to that, and then he tried to do it again, where he bought the 72Ks, and that didn't work.
That didn't work.
On that. But he only spent 12 mil of premium, I think. I mean, sorry, not only, but he spent 12 million of premium on the 72K. So he was up like hundreds of mil on his 36K buy, and then he spent some premium to buy the 72. So it's like, and interestingly enough, on the second run up, you haven't seen much whale call buying. Actually, you've just seen like a smoother move up, and so like in a way, it's almost more of a real move than the previous one. Like the previous one where like you saw that a lot of the market, like I got a little bit bearish that time because I'm like, this is just all fear now. Like people were fearful that it's going to go to 72K in like a week. And in reality, it's not that easy to go to 72K. It's still a fucking high number. It still
takes a lot of money to move it to there.
It still takes a lot of money, right? But there's a lot of fear in the market that that would happen. So like now, like you're not even seeing much call buying. Like I think the skew is not too bad at all right now either. So good strategies are like where you buy a call, you sell a put. I think long term, you will see vols be underpriced relative to moves because people aren't thinking about them as speculators. They're thinking about them more as like yield. And so there's always good opportunities for options buyers in that environment because you're capturing that kind of risk aversion. Right?
And that's where some of the opportunity is in legacy too, right? Where when it's consolidating, it's when your vol becomes the cheapest and it's the most attractive to buy it.
Yeah, exactly. I remember during the 2019 early pump, like from I think 3.8K to 5.5K and then 7K. I think during that, like I heard like more than half the market makers on Deribit got wiped because they just had they just didn't think that it was possible that you would double in like that, that much time. And so like whenever it's not moving, people always think that whatever just happened is like going to happen forever. Like even though like it's actually, like whenever Bitcoin goes like 30 vol, 40 vol, and people are like, okay, Bitcoin's a stable coin. Like Bitcoin is for sure not a stable coin. We all know this, but it'll look appealing to people to like sell options at that point because they're just like,
That even happened on Ethereum, and y'all were talking openly about being long vol. I can't remember what the price was anymore, maybe like 360 or something, and it was just this sideways consolidation. And I noticed y'all's long option strategy there was basically spread out your strikes, spread out your expiries, and let it roll because you had the baseline thesis, and then it was just kind of waiting out how long will this consolidation last, and that obviously worked out super well for you.
Yeah, like I think the nice thing about it is you don't have to be perfect on timing, but you also don't have to worry about it too much because if you're right within the time period, like you'll get paid basically. Whereas with like a leverage long, you have to manage it a lot more and think about where do you stop, where do you cut, that kind of stuff. So
another thing you brought up back when you did that, or after the fact maybe, was a lot of that was the way you hedged having stables in yield farming. And I really want to get your opinion on yield farming. Was DeFi summer, like those types of yields, was that just a once in a lifetime type of thing? Or do you think we'll have more cycles of highly speculative yield farming? What's your take on the future of yield farming, especially with the more stable assets?
I think yields will never be as high as the Wi-Fi days because in a way that was the beginning. It's almost like if you farmed Wi-Fi in the first few days, it's like mining Bitcoin on your laptop in the first 3 years. I kind of see it in that sense where, it was so new to everyone. And like now, like every time there's a new farm, like it's more derivative now. And if it's like, I think that the safety is relatively, it's now priced in. Like if the yield is really high, I generally assume that it's not that safe. Because if it wasn't, then people would be putting more money in. So it's almost like efficient market hypothesis, kind of efficient yield hypothesis is kind of coming out more and more. But there's still a lot of alpha if you go deep in the communities and you think this is a good product, I want to farm it. But usually too, it's a better risk reward to just buy it. Actually, if you really think it's a good coin, you're better off risking a small amount of money and just buying it. Like with Wi-Fi is kind of what we realized, right? Like we farmed a lot in the first few days too, and then we're like, if you're bullish on it, you also just want to buy it because, farming it, you're taking this risk on your full capital. It's a concave strategy, right? Not a convex one where you're getting paid per day. But if you're wrong, you get fully rugged. And so if you think that it's good, your risk reward may be better for just buying actually. And that turned out to be true for a lot of projects from the early time where it could have been farmed, but then you would have made more buying it. And like a lot of these farms don't last that long either. Like they last only a few weeks and then they stop emissions and then they pump, things like that. So,
and in terms of that efficient yield hypothesis, do you think as the stability of platforms continues to improve that we will start to merge in terms of yield opportunity more with legacy systems? And is the delta there essentially the smart contract risk that we're seeing?
It's also the leverage demand by traders. And I think that there's right now a massive demand to be leveraged long crypto because it's generally consensus that we're in a super cycle. Like people just want to get long as much as possible. They want to hedge their future fiat inflows into crypto now. Like we have employees where salaries are still in fiat, but then they'll be like, I need to buy a forward to hedge this into Bitcoin. Like otherwise I'm just going to be, I'm going to be screwed. So I'm like, okay, then you have to buy. And if you imagine that happening everywhere, then it's almost like natural contango makes the most sense because people need to hedge their future fiat into Bitcoin during this big, this sort of big hockey stick part of the cycle. So I think given that, you're generally going to see quite a bit of this kind of natural contango in the market, and that drives a lot of dollars in the system. I talked to some of my ex-bank colleagues who are just like, wow, you can earn 20% on dollars. it seems like a Ponzi. And I'm like, no, 20% is FUD. Like 20%, you're not even doing it right.
Yeah.
Like you fucked up, right? So I think that's like people are now realizing that, wow, there's actually a ton of yield here. And the reason why there is the yield there is because a lot of the dollars in the traditional system haven't come in, which is, by the way, a very bullish trend for DeFi as well, because what has DeFi allowed? It has allowed people to lend money to other people without intermediaries of institutions, but using code. And, that is incredibly powerful. And the connecting of those desperate participants is something that I think can drag like trillions of dollars into the system, right?
Do you think there's information asymmetry behind being a market leader like 3 Arrows? Like, do you think that the game gets easier because you're winning? So, I can speak about my experience, right? Like, apart from all of my old friends getting back in touch to ask how to buy Bitcoin 10 years after I told them to, a lot of people reach out to me and just say, have you had a look at this? Or, by the way, I heard this is happening. Or, like, here's some research that I did. You can have a look at it. Tell me what you think. And it's a lot of stuff that I would not have looked at myself. And it's been like relatively profitable, often taking positions based on this stuff that just naturally reaches out to me. I imagine you're in a similar position, but like at a different scale, where it's not like randoms on Telegram, but it's like nation states or
hey, but don't besmirch Jason from Telegram at the same time.
Jason from Telegram is godlike.
I think it definitely helps solidify my longer term bull thesis, because like I'm seeing the wealthiest people in our society globally say this is something that's here to stay, and what is their strategy for dealing with that? I think, with smaller nations or it's like smaller sovereign wealth, there's a big game theory there too, where you don't have to put up a brave face and be like the euro is the future of mankind, or like this kind of stuff. You can just invest, right? And so I think you're probably a lot of African nations have already bought, in my opinion, and you're going to see possibly announcements, possibly no announcements ever, because there's no need to, right? It's just the treasury asset, and it's almost like it's very hard if you ban Bitcoin, if you ban crypto in your country, and then the rest of the world hyper Bitcoinizes, like it's really tough to convince them, well, guys, like that was a bad idea. Like, why don't we go back to how it was? It's very hard to do that, right? And so the game theory for a lot of small countries is to be like, I don't pick the winners. I just go where the market tells me. So if the market's going up, then I buy, and if it goes down, then I lose money. I don't really care that much, right? But like, I'm not paid to bet against the market. And so you're going to see a lot of that thinking as we go higher. And that's something that I think retail especially, they really underestimate, which is that, if Bitcoin were to be able to get to 100K, 200K, 300K, these kind of numbers, what would that mean to have happened? Well, it means that the people holding it are probably different than a few years ago, and that they may have quite a Pascal's wager to it. Like, I always tell people, like, the people buying at 100K are much less likely to be the type to redump it at 80K than the type to buy it at 1K and sell it at 800. Because if you're willing to pay 100K for a coin, let's say 10, 15 years later, then you're saying, then I respect the market. I respect the pump, right? I say, okay, guys, like you have memed a consensus currency into existence, and you have not died. Like, nice hand, here you go. And they'll write that to zero, honestly, because they don't need the money, and they will say, I need to hedge against this, or I need to be part of this. So like, something that people are starting to calculate recently is like, how do you acquire 1% of supply? How do you acquire 0.5% of supply? Because let's say you own X% of supply in the real world. Let's say you're a Saudi family, or let's say you're that's a question people always think about. They're like, how do I acquire 0.5% of supply? That seems like a safe amount to them. And then when you say like, this is how you do it, then they're like, okay, yeah. So like this kind of flow, I think you'll see more and more over the next decade, where people are going to say, I just want to have 0.5% of the supply of it, or I want to have 0.2% of supply of it, because I have 0.2% of all good things that are getting popular. Like I don't bet against that. So
something I've hypothesized that I think attributes to essentially retail getting priced out of this cycle with Bitcoin is the inherent unit bias, because all my friends are like, oh, well, Bitcoin's at 50K again. It's naturally just another bubble. And I feel like there's just going to be this massive disbelief as it enters six figures, and institutions will look at, well, what's the relative market cap to gold or something like that. Do you agree with that type of thesis? And secondarily, like, what do you think Bitcoin plays in terms of its role as a macro asset? Because I generally just think it's too small if it's going to be in the big leagues of a proper macro asset, and that's part of my growth thesis. But I would definitely want your smarter brain than mine.
I do think that there is something to be said that retail will generally sell Bitcoin too early. That's kind of my general heuristic for this whole cycle, because you see that trend in all good assets, right? Like retail also doesn't own a lot of like gold. They also don't own a lot of ultra prime real estate because they just don't have that much money, right? And as soon as it goes up enough, like log wealth, which is one of my favorite memes, it kind of kicks in where they say, okay, this can now buy this in the real world. You know, they no longer need to hold for the extra, up move. They can now feed their family. They can now buy a place. They can buy it, so these kind of things, nothing wrong with it, but just for these reasons, there's that kind of natural funneling toward stronger and stronger hands. I mean, you see this in in Beijing, like a lot of my family is from Beijing, and the property market really boomed in the early 2000s. And people were like, they sell their land or their condo at like a 5x versus 2 years ago. And they're like, wow, like that's incredible. Well, they check again in a year and it's up another 3x. And then they're like, okay, well, I guess I don't live in the city center anymore. I guess I live somewhere further out.
Yeah.
Right. And you see that happening a lot. Like at some point, the best properties in every city, they were not owned by rich people. They were owned by middle-class people. But, that gentrification, I kind of see like that gentrification of Bitcoin. You're already seeing that now, where a lot of Bitcoin's moving into, these kind of bigger players' hands. So, that is a debate that I often have internally, which is like, how is it actually going to play out? Like after that happens, what will happen to like altcoins? What will happen to Ether? What will happen to, the whole ecosystem? I think it's very interesting to think about. It's tough to say.
So I've been reading a bit of chat, and chat want to know, how are you so massive? What is your gym routine?
Actually, I was super weak for most of my life. I after COVID, I got a personal trainer, so that's been fun. We just do 3 times a day.
3 times a day?
3 times a day?
Three times a week.
Oh, okay. We just do 3 times a day. Cobie and I took the exact opposite track. We're just sedentary for a year straight.
I'm slowly dying. So how different is your daily routine from the famous Hunter Thompson daily routine?
Mine is relatively standard. I mean, like I got 2 kids, so it's just like, you wake up, play with your kids, go to work, go to the gym, come back, put them to sleep, shit post in between. It's pretty standard stuff.
There's one guy in the chat who's very upset that we haven't spoken about his bags yet. What other questions do we have in the chat for the 3 AC, where C stands for Chad?
We had a lot of people asking about their bags, aka your bags. I think my version of that question is, how have you seen like successes versus disappointments play out, and how do you adjust like kind of the way you react? You said you might hold it to 0 or billions or whatever, but if a team is underperforming, do you step in? Like how do you handle those investments? I
think it's tough because the team ultimately is still the best position to take care of their roadmap. Like you don't want to push too far to a point that they don't really see that as their vision. So, I mean, we're pretty happy with all the teams that we invested in. And, this is a very competitive part of the market now where there's like copycats coming out everywhere. There's a lot of attention for mind shares. So, there's going to be through that process, like a natural like a Darwinism that will play out. So like, I mean, definitely don't go all in on one bag ever, right? Like part of the point of decentralized finance is that you're going to have a lot of different applications that play well with each other. And so, there's no reason to go all in on any one coin, in my opinion. I think like a lot of what I learned about sort of that kind of portfolio thesis is like from Arthur 0x, who, helps manage a lot of our DeFi and who I seeded early on. Like, he's of the mentality of like, you never sell your winners. And this is like the biggest trap that a lot of retail gets into, or even a lot of traditional like investors get into, where they sell their winners to fund adding to their losers. And so if you actually do that in DeFi or in small caps or mid caps even, like, you're just gonna be totally wrecked, because anything that goes up 100x, you have sold at 2x. And meanwhile, you will have DCA like your shittiest bag, which is 0.5x or something. And so it's a really, I've seen that so much where, it'll be up 3x and people will be like, okay, it's like overheated now, I'll sell it. And then I'll like buy something that's underperforming. Well, a lot of times there's like fundamental reasons for that to happen, right? So it's like that's a very tough way to trade. So I think a few good ways are like you research products you like, you buy them, and then you hold them either to zero and to infinity. Or if you trade them, you just keep yourself very disciplined and you say like, I need to stop out of my new long into something else that I think is better. But you can't always sell a winner to fund a loser. And that's, I think, the biggest leap people have been making in DeFi.
I saw one question in chat that said, what would you do if you were starting today? If you're like someone new to crypto and you want to make it to the Citadel, you want to buy a reasonably sized house, how are you starting? What are you doing?
I think there's a lot of opportunity in early stage projects right now. I think like participate in networks. You can get paid to participate still in many different projects. So like Kusama, Polkadot, they have parachain auctions coming out. There's you can run test nets and get paid on some of these projects. You can do that on Mina as well, which we're an investor in.
I tried so hard to get an allocation in Mina. Everyone keeps ignoring me.
So, I mean, this is one of those projects and one of my bags too. But like, you can make trades on KeeperDAO and literally get paid in Rook for it, and not pay the gas. Like, that's a way of participating, and it's just trade mining. So it's like what we all do, not to. There's
a lot of these, and the biggest thing is just like surround yourself by smart, positive thinking people. Like, the thing I realized very early on coming back into crypto, like more actively, like I got really active in Discord. I think I first got more active because I was on the BitMEX leaderboard in early 2018, and I was like, I just want to chat with like everyone in the space, just like really quick, like grassroots people, like, and like very quickly you see like there are people that like really believe in the long-term thesis of crypto, but they like, they're trying to find where. And then there are like others who are like, I just want to, buy and sell and get out and whatever. And I think that the life-changing gains have all been made by the people that are like deep, true believers, but also sophisticated and saying, where do we go? Like where are the big opportunities, right? I mean, think about synthetics. If you, even without buying SNX, if you had just, staked synthetic ETH versus ETH in the Uniswap pools, I think like, including the Uniswap airdrops, including the Curve airdrops after it moved to Curve, like you'd be up like 50x or something on dollars, like just from the airdrops, right? And so there's a lot of, because crypto is user-driven networks, these opportunities are native to crypto actually. And so, you see that now with Nifties where, there's a lot of that. And so with that said, it is tough at the specific moment because of Ethereum gas. But my hope is that once you have layer 2 and once you have this activity going cross-chain as well, I think there's going to be huge opportunities to be early adopters of projects, to be early adopters of these things. That's how you really go from zero to like really high figures. I mean, like when I first met Arthur, he was at an incubator writing research, and he had a partner who quit. He quit during the bear market to go back to a $3K a month job, basically. And so like, you think about that swing, it's like, it's like a 5-figure to 9-figure swing for him, right? So it's pretty wild. But I think that kind of stuff is what is. I think it's always possible, even in the mature stage of the cycle in crypto, because it is fundamentally grassroots. So
I mean, Synthetics and Link were both like bear market arrivals, basically.
And Ava as well, I think.
Aave for sure as well, yeah.
So chat, stop trading 10, 25x leverage on Binance and start doing some research into the future of finance. Altcoins, early stage projects only, stop getting liquidated on a 0.2% move.
So my buddy Pat asked, what do you view as the next high volatility event of the cycle? And in particular, like ETH. So the equivalent of 2017 Bitcoin fork drama. Do you think 1559 is going to be that, or there's some other issues that are going to be that type of trigger for the volatility in the cycle?
Sure. I think, EIP 1.59 is, which is the fee burning on transactions on Ethereum. I think that's definitely a very big catalyst, because that would potentially move Ethereum to lesser inflation than Bitcoin, which would be a very bullish catalyst for Ether as an asset. That'll have some volatility around it, because it's being protested by miners right now. So you kind of have some strife, but I think that'll generally go through.
Live by summer.
I think
Heard it here first.
I think July Berlin fork, they're saying, right? So I think that's a pretty big catalyst. I think, I think in Bitcoin, you'll just get like more and more adoption down the road. I think, with dips and with things like that. But it's, like just the other day, like the Canada ETF, it came out and they're buying like 1,000 ADC a day. You see sort of more of that kind of stuff. So I think in general, the downside volatility will be a lot less than people think from that kind of stuff. And then it's very path dependent to predict what will happen with the other stuff. Like, I think layer 2 Ethereum is a big thesis of this year for us, as well as a few other funds, where they think with the scaling, you can get a lot of really interesting stuff starting to happen. So like, we're generally like overweight application layer. We're generally thinking that layer 2, we're about to make some investments as well, which we think are quite interesting. But I think that this has like been a very good cycle, I think, for people who really dig into the fundamentals of projects. Because like 2017, you do research and it sounds like a bog meme, right? Like he's doing research, like he's like, you're just getting scammed, right? And you're doing work to get scammed. Whereas like now, I do think if you do research, you like, because these things are actually on chain, you may be the first to research something that's really interesting, and then you ask people and they're like, okay, yeah, like this makes a lot of sense. We go in it together and we do well. And I mean, it's very tough to predict high volatility events in general, because the market is very path dependent. It's never 100 or 0, right? Like if I'm long, doesn't mean that a market always goes up. Like I don't always win, right? Like that, no one can always win. But I see it's dipping now. I see.
Yeah, you're supposed to switch to red wine. I've been told like 5 times.
Shit. I gotta go grab it from the fridge.
Cobie, the chat has asked you to square doing research, which you just told them to do, versus you only do that when the market is down.
Only reading what your bags do when it's getting dumped is a meme based on how people actually seem to trade these days. I immortalized sort of by the introduction of just like food related names. Like no research required. It's called pickle or burger or whatever.
Yeah.
It's like,
hey,
like that's how people seem to trade now. But people underestimate, I think, we're in a super, super, super hyped cycle now. There's a lot of attention. Everything is going crazy, and the repricing of something that's undervalued is almost instant. It happens so much quicker than people expect. It happens so much quicker than it did in 2018 through to now, because there was less attention in the bear market and blah blah blah.
Yeah.
So if you find something that is truly undervalued now, I think that people are underestimating how quickly that can reprice and how quickly they can make sort of significant multiples, versus in the past where, like things took months or years to go 10x. I think things can go like 10x in days now.
As soon as that narrative hits.
Exactly. As long as you found something that is like fundamentally interesting and like significantly underpriced versus market, just because of some information asymmetry.
Yeah. All right, Sue.
You on to the red wine.
Sue went to get red wine, but I need the chat to participate in the plunge protection program, and you can do it by going to freaking Blockfolio. Go to uponly.tv/Blockfolio, install it, and buy the damn dip. All right, that's what you get. Blockfolio, uponly.tv/Blockfolio. Download it, buy the dip. Sue's here with the plunge protection team. So you got the red wine. Does that mean are we making buy orders right now?
It's bear blood.
Where are we? We're all just like, oh, we got to look at the market.
No, I'm just kidding. No, it's I think the market's reacting to Sailors because he's done, right? So they're like knee-jerk dumping because he can't buy anymore.
Oh, he said he's done buying?
He said he's done buying.
Well, I mean, they already bought their whole treasury. They then took leverage like twice to buy some more. So why is anyone surprised?
I think some people were hoping that he like hadn't started yet and he like actually sold to rebuy lower. There's this conspiracy theory I heard. So
that would be worse though, because it would essentially fit the narrative that, you know, some of these institutions are willing to sell. Everybody acts like they have these iron hands, completely unwilling to sell. Do you think that's true, or are we going to see turnover as the larger institutions, you know, actually trade instead of just hold forever?
You're already seeing them trade, right? Like Buffer, I think, which is a large macro fund in London, they claim they sold at 40K during the previous part of the, I think in January. So I think they will sell, but generally they're already not allocated enough. So the net institutional flow is buying, but they will definitely sell as it goes up. I just think that it's like the whole beauty of what Saylor is doing with MicroStrategy is that he's saying because the credit markets and the stock markets are so insane, he can basically borrow for free to buy Bitcoin, and then people will value his stock because it holds Bitcoin at a higher price than the Bitcoin itself. So he's basically playing that game. So like there are scenarios where he could be forced to sell, obviously, and that would be pretty bad. So
I mean, that seems like it could be an attractive outcome for certain market participants to want to see.
Yeah, I think it's. I mean, like everything is always non-zero, like in my book. So I don't really rule out things that can happen, but I kind of think like you'll see a lot of warning signs that were to happen. You kind of see, like a lot of like if the credit markets, if macro really took a huge shit, like crypto will not be unaffected by that. I mean, I consider this dump mainly driven by macro. I mean, Tesla nuked. A lot of stocks nuked. People are generally concerned about yields, rates. You know, if the 30-year rate goes up a lot, then there's going to be a knee-jerk selling of Bitcoin. But I do think that it's important to separate like secular and cyclical trends. Like things can dump together, but then on the way up, like one asset can go up much faster than the other stuff. So I think like playing macro, generally speaking, is difficult because there's no consensus on like you can't just casually call like a macro top, and if there even is a macro top for, let's say, assets versus cash, right? Because if we take the Germany fractal or that example, there will be no top to assets versus fiat. They'll just actually pump forever because they're printing the denominator. So you would be foolish to bet against that. Like it's like in North Korea where they denominated like 1,000x twice in a decade. Like, how would you bet it? Like, why would you hold a thing that's being debased, right? So, you know, I generally think that like the people who are betting against crypto based on like the macro blow up thesis, it's seductive, but it's not as sound as it sounds. Like, if that makes any sense.
Yeah, it does.
Because you're just casually anointing yourself as a macro god, basically.
I pulled up the 30-year, and you know, I'm not like perfect at macro. It's something I'm trying to learn more and more, but it seems to be one of those signs of, you know, people expecting inflation. And then the other thing we see though, is like the short dollar trade is so crowded. How do you square this expectation of inflation versus like when the trade gets crowded, can that last a long time, or what kind of hiccups do you see happening in that trade, even if it's right?
I mean, the short dollar trade is one of the most popular trades in macro right now, and I think for good reason generally. I think that the U.S. fiscal policies are sort of unprecedented, dovish, and kind of I mean, the game theory of it is such that they don't really have a way out, and so it's just a matter of like, because they're crowded positions, you'll have squeezes from time to time, but that I think it's a sound trade that'll play out. I mean, people don't realize this, but like, or they don't think about it enough, but like the most consensus trades in macro are usually the best ones. And actually the max pain is from people that didn't hold it long enough. Like that is like, if you think about, gold during the 70s, or like some of these trades like Nikkei short during the bubble break, it's like people, like the max pain was not holding it long enough basically. And not at all that they were actually wrong about it. Or like, I remember like dollar yen, I think during the Plaza Accords where they got together and they said like, the dollar is overvalued versus these coins, we should weaken it. Like the dollar like weakened like absolutely like insanely over a period of time against the yen. And like a lot of people like took profit on the way up, and then they're like, why did I do that? Like Soros talks about this where like he basically, he has a portfolio of traders and he inherited all their positions because they kept wanting to sell to take profits. And he's like, don't put that in the market. I'll just put it on my book. Right. So I think you'll tend to see that happen actually, in like the short dollar trade where it'll just play out, but people won't make as much as they should. I think second to that is just like you have the CNH, or you have the Chinese yuan story coming out where they're trying to basically liberalize the capital account and have more and more foreign nations, foreign companies start holding the currency. And that I think is like ultra bearish for the dollar as well, because the dollar really is the reserve currency of so many treasuries right now globally. Like even companies, right? Like a random company in South America, they may hold dollars because they're like, okay, I hedge it into dollars, and that. If they start hedging into renminbi, they start hedging into Bitcoin, like that's not good for the dollar. And the dollar commands this large monetary premium from its role as the reserve asset. So I think short dollar, I like that as a long-term trade. I think the rates, it's very difficult actually to say how it will happen, because there's a lot of fundamentally very deflationary forces in society, and technology being the biggest of these, and so also, can the Fed lose control of rates? That's another question. Like, will they lose control of rates? Like the world order would be in a lot of trouble as well if they were to lose control of rates in the near term. So most likely they can hang on with yield control for yield curve control.
Yeah,
4 years more.
To describe that is, if inflation got out of hand, the 30-year blows to the upside, and they essentially can't control the rates, and then our debt becomes much more expensive, right?
Exactly. So I think long term, I mean, it's kind of like bull's hard to say, but like long term, both of these cases are bullish for Bitcoin. And the reason why that sounds bull-hard but is true is the fact that if you have that happen, then people will say, okay, like we need a predictable reserve currency, or we need a predictable base money, and it'll go toward this direction of consensus money, right? Like the biggest contrast I have with fiat is consensus, where it accrues value from people believing in it as opposed to state decree. So people will see a need for that in that case. And in the other case where, it moderately happens, people will also invest in it as a risk asset. And over the longer term, that kind of also creates that hyper monetization through the hype cycles. It's probably more bearish for, let's say, like hardcore speculation use cases of crypto, or like, it's probably not great for Nifties if you have a huge global recession and all that kind of stuff. People don't really want to do that kind of stuff if that happens. But, I call me a bull target, but I think that Bitcoin can come out quite well from even the 30-year blowing up. That kind of a scenario.
Which is trying hard to do right now.
It's trying, yeah.
One of the questions in chat was who are like the top 5 people that that you suggest people should be following who are doing amazing things in crypto. But I wanted to just on this point out, I think one of the most exciting things at the moment is as the crypto market cap, as prices of ETH and Bitcoin go up, then you have this network effect of pulling people and talent into the ecosystem. So the teams today are so there just seems to be an incredibly talented team that you've never heard of around every corner. And as the prices go up, it's sort of pulling people. You know, the last 20 years, we sort of wasted spending all of the most brilliant minds. They wasted 20 years getting people to click ads. That's all they did. They just went to work for the biggest companies in the world and like try and like monopolize social relationships into selling people stuff, or try and you know, pivot people's like search behaviors into clicking on adverts. And now the combination of open source development with very clear financial incentives seems to be sort of vampire attacking all that talent into building stuff that seems a lot more important than growth hacks to click on advertisements. How have you seen that from, you know, like a 3AC's investment point of view? And then back to the person in chat, who are the people that they should be following and why?
Yeah, I mean, you make a great point about the talent flow. I think it's already gotten to the point now where, like, all the young smart money, all the young smart minds, they're like, their immediate reaction is to not join institutions like banks. Like, you know, like when I was in college, like in the mid 2000s, like everyone wanted to work at Goldman Sachs, everyone wanted to work at McKinsey, like, and then just 10 years later, basically no one wants to work at those firms. They all wanted to work at big tech. And now people are like, okay, here you can build something that you like to do. Like if you stay at Google too long now, like there's almost like a stigma to it already that's happening, right? Where people are like, well, why are you still doing that? Like, well, why don't you do something that you believe in? So that I think is insanely bullish long-term for the space. The ability to kind of deploy apps and then have them be used. I think I read in the Definity blog post on CoinList, like they mentioned this idea of like after the Zynga deplatforming, like VCs didn't even want to invest in application layer as much, especially controversial application layer, because they thought that it would not, you know, it can be killed in a day, right? And so like now you have people that are saying, okay, how do you go from code to $1 billion application like within, you know, weeks? And you actually see this happening now in DeFi, and so that I think is insanely powerful. I think in terms of 5 people to FF to follow Fridays, it's tough for me to name. I mean, I think there's so many different corners of crypto Twitter now that are all interesting. Like you still have like, you know, I think OGs like yourselves and who trade and who also have a lot of good takes in general and help people through the cycle. I think you also have a lot of like, I mean, in general, I think a lot of the anons that are in DeFi, they're really good follows for Alpha because they're like all in the Discords as well, and they're talking to developers, talking to the team. I think if you have the time, like, to definitely follow those people and like put in that work. I think it's, aside from that, I mean, like there are people that like post like both bullish and bearish takes like every few hours. Like, like probably unfollow those people if you can. Yeah, I think
Twitter unfollowed Gainsey for us because he got banned again. So
okay.
him flipping his text based on like his current margin position. Not to say
on the 1 minute chart.
Yeah, I mean, not to say it's against someone like that, but that's a different trade than someone that's like trying to provide their longer term thesis. And I feel like people can end up equating short term trade and like someone tweeting about it versus long term ideas.
Okay, so we gotta follow Tetranode and follow Spartan, even though he's left us, and unfollow Gainsey. I'm happy with that recommendation. The other question on chat, and they're getting angry with me for not reading it out, is like 3 book recommendations, 3 things that have sort of helped define how you think about like finance, the markets, or just about life.
I think Market Wizards, definitely the whole series was very, very influential to me. It has a lot of anecdotal stories of different traders throughout, you know, the years, different asset classes, all successes, but the kind of, you see where they started from and how they kind of, the psychology of the markets and these kind of things. I think it's super important to just see that it's like, I think there's a problem in trading, which is that because it seems easy, like you press a button and then you win, there's like that initial gravitation toward it because of the ease, right? And that's where these ads all get people, because they're like, they'll play these ads while on YouTube and they'll be like, look, this lady made $5K a month while like in her pajamas and clicking buttons. But real trading is a lot of work on top of that. Like it's probably one of the hardest careers, I think, because of the fact that you have to be so self-critical. So I think that's definitely a good read. Market Wizards. I think most stuff that Soros has written about trading is quite good. Soros on Soros, especially, where especially talking about reflexivity, I think is very powerful as well. Where like, and I think like in general, anything you can read about reflexivity, about narratives is very powerful. I mean, Gerard is a guy that we talk about a lot. Talking about the mimetics, mimetic theory and things like that. I think probably a bit theoretical, but it's worth thinking about more, just in terms of, like I think the irony of postmodernism and like Austrian economics and all these kind of things is that they kind of share a common link, right? Which is that like the intersubjective nature of value, which is that we value the things that other people value. And I think that some of the earliest adopters of Bitcoin, they saw this very clearly, where they said that what would be the mimetic demand for the incipient digital value should be fucking high. And we all use the internet, and like they could see how it could get memed to become global money. Whereas, for some of the more analytical thinkers, non-reflexive thinkers, they're just like, well, right now it can't do this, it can't do that. Right now it can't, so the kind of thinking kind of hurt me in the beginning in DeFi too, where like, Arthur showed me SNX at 2 cents and I was like, like, what is this thing? Like, it's just a scam, right? And then like I had a call with the team, I remember, when it was like at 4 cents, and I was like, there's this flaw, there's that flaw, there's this problem, there's that problem. And then they're like, okay, cool. And then it's like, you check again, it's like 20 cents. And then you're like, okay, like, what am I missing here, right? And then I think what you learn from understanding reflexivity is that like the market is what other people see the market as. And you generally want to be predicting or trying to think about what kinds of narratives, what kinds of things will get more popular in the future, what communities are anti-fragile, what kinds of ideas that once sparked, they'll set off a chain reaction, these kinds of things. So
I think that's probably the alpha leak of the stream. I hope people were paying attention and didn't drop off, because it came towards the end of the screen. So there it was. I think that the most simple example of that is when you see this sort of bubble project where Uniswap does well, and then immediately is a shift like, okay, I missed out on that, I'm getting in the next one, and then Sushi does really well. And it seems to happen throughout history in crypto, even way back when Dogecoin, Doggy Stock, was launched. There was immediately a cat coin straight afterwards called Kitty. I think that's a really simple version, but if you go a little bit deeper on it, I think it just becomes a really powerful tool in predicting, especially alt cycles, and what will overperform and underperform in alt cycles.
Definitely.
Sue, what do you want to leave the people with before we go?
Yeah, I guess I think it's always good to think of like compartmentalizing the way you approach crypto. So like you definitely want to set aside an amount that you're going to put in cold storage, like just because you don't want to overestimate your own ability to do things. So, there's a lot of people that think that they can trade like every move, but the markets are always challenging. So putting away a certain amount gives you that kind of freedom to take risk as well with the rest. And then I think also like it's super important to have good risk management. Like you don't want to be like blown out during a super cycle, and it's really unnecessary as well. Like there have already been people that have gone, quite big gains on like no leverage, like during this cycle. So I think, reasonable amounts of leverage. You know, don't think that you have to catch every move, and recognize that no one is catching every move like either, right? Like no one is predicting. Like there's no market maker that moves Bitcoin around all day. There's no market maker that moves ETH around all day. Like these are now have already reached macro convergence. They're trading on the CME. They're trading in the stock market. So there's this like unknowability that you have to respect the unknowability of a lot of things, but be confident in your like midterm, longer term thesis on things.
Awesome. Thanks
Amazing.
so much. Cobie, what do you have?
2 final questions. 1, is Dogecoin going to make it to $1?
Dogecoin, right?
Yeah.
Yeah, Cobie just pronounces it wrong.
I'm British, mate. Chat hates that I'm British. Apparently I'm posh. I'm from Yorkshire, the HIV, hepatitis and heroin capital of the UK, but now I'm posh.
I mean, Elon's shilling Doge a lot, and he must have a plan for it. So I would. It's tough to say, but it can go. It can go up high. I mean,
and super cycle top. Sailor says 4 million. What is the super cycle top? There is no top.
I mean, I've been banning around 5 million with some people the last few weeks, and it's just like a shock number. But I think, I think there's an argument that gold itself is very undervalued. If it was the dominant store of value, because this thing was at 1700 like years ago, right? There's that Peter Schiff meme where it's like always 1700 like every year since Bitcoin came out. And so if you say, let's say gold should have 5x'd if there wasn't Bitcoin, then really, you know, we're looking at 50 trillion market cap. So then you're already halfway there to 100 trillion. So that'll get you around 2.5 million per BTC. And I think that is definitely possible. I think that at the top of it, it'll behave like gold is now, right? Like it's like low volatility ish. And I think that the way that people should think about how that process will go is that it'll be bursts, right? Where the markets look linear in like the short term. It's always like up 1,000, down 1,000. Then you get these bursts. And you get this like big repricing, and then people can never rebuy again. Like if you were offering at 13.5K, and then the market moved through the 14K a few months ago, like it's gonna be tough to get those coins back at the same price. Very tough.
Yeah, you just blew my mind.
So you know these bursts are really big, and it's also comes back to the unknowability, right? Like you don't actually know what the burst will be. You don't know that it's going to be Sailor this, or you don't know that it's going to, you can't actually know these things. But if the macro concept of what you're doing is correct, then, you know, like even think about Ethereum, like nobody knew that there would be a YFI that kicks off these. No one knew that it would be a comp that creates a compound. But, you know, the general principles of open source were there. The general principles of, you know, this is composability on a layer 1 chain that can generate a lot of economic activity. These kinds of things get you in the right neighborhood, I think. And then, you know, in terms of timing the supercycle top, I don't think it'll need to be timed. I think if the supercycle plays out, it's the thing about wealthy people that I've learned over the years is that they don't go into cash nearly as often as people think. Like for them, it's all about owning things. Like if you're like sovereign wealth fund, if you're the Norway sovereign wealth fund, you either own this or you own that. You own timber or you own like these stocks or you own that land, but you don't ever actually hold a lot of cash or even bonds for that matter, because you're just too rich to like go into cash. It's all about going from assets to assets. And so I think actually like having an asset to asset mentality is very healthy. Like provided you have enough cash for your own like expenses, I think going from asset to asset is actually really smart. I mean, even think about crypto, right? Like if you just only go from like Ether to BTC or to like DeFi or to other coins, like your mentality is a lot better because you're not trying to time like huge macro tops. You just say, I think right now, you know, swish, like that's how you think like a whale, right? Like a lot of the biggest crypto whales, they don't go into dollars nearly as often as you think. They go from tokens to ETH or from ETH to BTC, but they're not like randomly going 100% to USD and then the market 3Xs on them and then they're like now stuck in fiat, right? So I think it's very healthy to think that way, actually, and it's something that's counterintuitive to a lot of people, but it's actually very intuitive to to TradFi investors who, when they sell a stock, they almost always buy another stock. Like they don't just start holding huge amounts of cash because they, sold the stock. So
yeah, that makes a lot of sense. We are going to have to leave it there, Cobie. I've got to take my kids to school, and I'm running the stream. Did you want to give one final thought?
I was just going to say, in 5, 10, however many years from now, I'm looking forward to the flex where 3 Arrows Capital are the only people able to transact on layer 1. It's going to be the biggest dunk of all time transacting on layer 1, isn't it? Like everyone else is on like layer 17, and you're like, I'm just going to make a transaction on layer 1. Fuck it. Thank you for coming on. Thanks so much. Hope we can get you back soon. I want to hear about your opinions on penthouse dilution. Thank you, everyone.
We missed that.
Thank you, everyone, for listening. And tomorrow we're back with Calix and KSI. And next week, Mark Cuban. Peace.
Take care.